The Federal Reserve System, the U.S. Central Bank, is predicting a soft landing for the economy. However, it may be difficult to achieve Goldilocks stabilizing prices and avoiding an economic recession. Recently, with the unemployment rate in the United States showing a low level and the growth of wages and prices slowing, expectations are growing about the possibility of an economic soft landing, but concerns about the possibility of an economic recession also remain. The word Goldilocks appears often. Goldilocks refers to a state that is neither too hot nor too cold. It refers to a moderate level of economic boom. It refers to an ideal economic situation that is neither hot nor cold. This term is taken from the name of the female protagonist of the British fairy tale, Goldilocks and the Three Bears. Goldilocks is a combination of words gold and locks, meaning blonde hair. In the fairy tale, Goldilocks is happy after eating the appropriate soup among the three bears: hot soup, cold soup, and moderate soup. By comparing this to the state of the economy, it means an appropriate level of economic boom that is neither hot nor cold. Although the economy is growing at a high rate, prices are not rising. This term became known when the British Financial Times reported that China had achieved rapid growth of 9.5% in 2004, but had no price rises, saying that the Chinese economy has entered Goldilocks. Expectations have grown that it will be possible to achieve the price target without an economic recession due to the robust trend of the U.S. economy and signs of easing the imbalance between supply and demand in the labor market. However, based on past experience, it is difficult to find cases where the wage growth rate slowed significantly without an economic recession. If the slowdown in wages and price growth in the United States is slower than expected in the future, there is a possibility that the Federal Reserve's high interest rate policy will be prolonged, increasing downward pressure on the U.S. economy. Additionally, the reason the Federal Reserve is currently expecting a soft landing is because although the inflation rate is slowing, the employment economy has not been greatly affected. If the wage growth rate falls, further increases in labor supply may be limited, slowing down the pace of improvement in the economic participation rate. The slowdown in wage growth in the United States occurred primarily with the onset of the economic downturn. In addition, Looking at the changes in the unemployment rate in the post-war period, when the wage growth rate passed its peaks, the correlation between the wage growth rate and the unemployment rate was clearly revealed. Expansion of employment has been negative factor in the stock market, causing wage increases, causing inflation, increasing the possibility of an interest rate hikes by the Federal Reserve System. However, the September non-farm employment announced by the U.S. Department of Labor on September 6th, Eastern U.S. time, increased by 336,000, almost double the estimate compiled by the Wall Street Journal recorded. Employment in September significantly exceeds the average monthly employment over the past 12 months. Average hourly wages in September rose 0.2% compared to the previous month and 4.2% compared to the same month last year. This was lower than market expectations. The market expected the rise of 0.3% and 4.3% respectively. Despite the surge in employment, expectations have grown as wage growth has been below expectations. Even though the possibility of a prolonged period of high interest rates has increased due to the employment surplus in the United States, expectations have been formed for no lending in which the economy will not decline. If the job market is strong, the U.S. Federal Reserve, which wants to better control inflation, is more likely to maintain the current high interest rate longer or raise interest rates further. Therefore, it is big bad news for the stock market. However, the New York stock market overcome this and closed higher. Moreover, the New York stock market closed higher on October 9th local time, despite the news of an armed conflict between Israel and Palestine.